so I think we're in. All right, so this is going to be pretty quick. I had a conversation with a young lady yesterday, and just trying to explain to her the additional child tax credit, because she was looking at her refund and she says, "Well, did I get my $2,000 for my baby?" And I said, "Well, you don't get $2,000 for your baby. It doesn't work that way." And so I realized a lot of people are confused by this. So I wanted to do a quick video, something that I can point people to really explain it. So what you're looking at in front of you is a definition from the IRS concerning refundable tax credits and non-refundable tax credits. Okay, there's only three refundable tax credits. One being the earned income credit, which we all know what that is. If your income is below a certain level, depending on how many children you have, depends on how much earned income credit you get, right? That is a table that you can look up every year that'll show you exactly how much earned income credit you can get for your child at your income level, okay? And I'll probably do another video concerning that another day. The other one is the American Opportunity Credit. That is when you pay out of pocket for education up to $4,000 a year. We'll give you a $1,000 refundable tax credit. The education credit, the American Opportunity Credit, is really good because not only do you get that $1,000 refundable tax credit, but you also get a $1,500 non-refundable tax credit. So, I mean, it is a boon all the way around. Okay, so we got earned income credit, we have American Opportunity Credit, and the last one is the additional child tax credit. Not to be confused with the child tax credit. The additional child tax credit is the third refundable tax credit that is available to taxpayers. Everything else is non-refundable. Okay, everything else is non-refundable. So let's talk real quick about what non-refundable is. Get to my screen here. And I found a really good definition on Investopedia. It says a non-refundable tax credit can only reduce taxable income down to zero and will not generate a tax refund in the case that the potential credit exceeds the taxable income, okay, as a refundable credit would. What that means is that a non-refundable tax credit cannot give you a refund. It does not put cash in your pocket. It simply reduces the amount of tax that you owe. So for example, if you owe $2,000 in tax and you have a $2,000 child tax credit, your tax is now zero. You don't owe anything, but you don't get anything back either. Okay? That's assuming that you don't have any other refundable credits on your return, right? If child tax credit is the only tax credit you have, it cannot generate a refund for you. It only reduces the amount of tax that you pay, okay? All right, so let's now look at, what else do I have here? Move this stuff around. All right. All right, so let's look at how this is calculated, okay? It's pretty straightforward. A lot of times I can do this in my head, just depending on what's going on. But it's $2,000 per child, okay? That's the child tax credit, okay? And the additional child tax credit is the unused portion of the child tax credit. Okay, we've already gone through that. So in this example, we're going to assume that this person has one child. So their child tax credit on line 1 you see here is $2,000. We're going to also assume for purposes of our demonstration that this person owes $1,000 in tax. How does that happen? Well, if you are head of household, you have one child and your income is $28,000, your standard deduction is $18,000, which makes your taxable income $10,000. The tax on $10,000 is about 10%, okay? It's not, but we're just saying this for our example, is about 10%. So we're going to say that the tax they owe is $1,000, okay? Now, if this person is smart, they didn't have any taxes withheld from their paychecks because they knew they had the child tax credit to take care of the $1,000 tax liability at the end of the year. Hopefully, they got all their money on their paycheck and they're not having to wait for it at the end of the year, hopefully. Okay, all right. So you see here on line 2, this is the amount of tax that they owe is $1,000. Line 3 simply says, hey, subtract 2 from 1. If it's 0, then guess what? They can't get this credit, right? Because they don't owe any taxes. So 1,000 is what we have, okay? Line 4 says put one child times 1,400. Why is that? That's because the additional child tax credit is capped at $1,400. And I think I had another link up here. I must have exited out on. I'll see if I can go back to it. But it explains exactly just that, what I said. The additional child tax credit is the unused portion of the child tax credit. Okay, so it's capped at $1,400. That is the case until 2025. Let's see if I can. Yeah, I'm going to go pull that up. I had that pulled up and I must have gone away from it. So anyway, until 2025, that is the case. Once 2025 gets here, they're either going to have to extend the additional child tax credit being $1,400, or it's going to revert back to the original 1,000 that it was for many years. So anyway, here we go. So 1,400 times one child, okay, gives me 1,400 on line 4. Line 5 simply says enter the smaller of line 3 or line 4. Very simple, $1,000. Next line is earned income. Okay, we're just going to assume for this particular case that we have, just to keep things consistent, that we have $28,000 in income. Okay, and we're going to subtract 2,500 from that. Okay, and that's going to bring us to 25,500. All right. And then we're simply going to multiply 25,500 times 10% plus 5%. Pull out my calculator real quick here. 25,500 times 0.15. That brings us to 3825. All right. 3825 is going to be the cap on your additional child tax credit, because even if you have 30 children, it doesn't matter. You cannot get additional child tax credit for all the kids. Is capped by your income. So the lower your income, the less additional child tax credit you're going to be eligible for. All right. So let's keep moving. All right. So after line 8, we come to the next one. It says on line 4 is the amount 4,200 or more. Line 4 is up here. Remember, this is how many children multiplied by 1,400. Okay. And so we just have one child, so the answer is no. If line 8 is 0, you cannot take this credit. Our line 8 is not 0 because line 8, remember, is multiplying your earned income by that 15%. So what that means is if you don't have any earned income, okay, if you don't have a job, if you don't have any money, guess what? You can't take this credit. You can't get the money. It's not available to you, okay? All right, so it says here, otherwise, skip part 2 and enter the smaller of line 5 or 8 on line 15. All right. So what we're going to do is we're going to skip part 2. See, this is for filers who have 3 or more qualifying children. Okay. We don't have to worry about that in this case. And we're going to put the smaller of line 5 or line 8 on line 15. And voila. What is line 15? Line 15 is your additional child tax credit, which is the refundable tax credit. Okay. So just want to go back and let you see again. We're going to put the smaller of line 5 or line 8. Okay, line 5 or line 8. Very simple, very straightforward. I do want to discuss very quickly some non-refundable credits that don't get utilized very often, namely the foreign tax credit. Okay, what is the foreign tax credit? Foreign tax credit is a tax credit that reduces your tax liability, and it can reduce it all the way down to 0, where you don't owe any taxes at all. Okay. Now, please understand, the IRS is a separate entity. It is not the U.S. government. It is an administrative arm of the government that has been given powers to collect taxes by the U.S. government. Okay. They're not immigration. They're not Social Security. They're not Department of Education. They are a separate entity unto themselves. Okay. Now, the question becomes, will the IRS be able to find out how much taxes you paid to Ghana or Nigeria or Bolivia or Brazil? Okay. how easy is it for them to go and gather that information from those nations? If you say, hey, I paid Bolivia like $3,000 this year in foreign income tax, I'm sorry, in foreign tax for some deal I was doing, maybe it's associated with a partnership, maybe it's associated with some corporation down there or something like that. That is going to be a tax credit for you. Now, if you're utilizing this, understand that the IRS is going to be looking for some sort of tax form that says that you were involved in some business somewhere. So again, that may be a partnership that's doing business in another country. That may be a corporation that's doing business in another country. That may be a nonprofit that's doing business in another country. So you have to have some entity that's involved in some business that can be doing business outside of the country in order for this to make sense. Otherwise, you'll be saying that personally you're making money in another country that caused you to have to pay taxes in that country. And then the IRS is like, well, where's that money, right? You have to pay tax on it. Because as a U.S. citizen, you have to pay taxes on your worldwide income. Doesn't matter where the money is coming from. If you're a U.S. citizen, you have to pay taxes on it unless you do not live in the United States for at least 270 days, or is it 360 days? 330 days. 330 days. If you live outside the U.S. for 330 days, then you don't have to pay taxes on any of your income. Is how that works. So again, just want to recap. Foreign tax credit, very underused tax credit. Very good for you. Just to go back and again, so there's two different credits: refundable and non-refundable. Non-refundable tax credits does not put cash in your pocket. It only reduces your tax liability. A refundable tax credit does put cash in your pocket, and there's only three of those: education, earned income credit, additional child tax credit. Two different things, okay? Child tax credit reduces your taxable liability. It does not put cash in your pocket. Additional child tax credit actually puts cash in your pocket, and we've already gone through the calculation of how that is done. If you have any questions, concerns, please reach out. I love talking about this stuff. Of course, I put all the links in the video in the description. I'll also see if I can find the link for the other site I had pulled up that explains the additional child tax credit running out in 2025 and how that stuff works. All right, from me to you, I'll holla.